Every year, China's political elite gathers for the Two Sessions. It's the mainland's largest political conference, and it's closely watched by investors as a window into Beijing's priorities. This year, the gatherings take on added significance as policymakers approved a new 5-year plan for the country's economic growth and development. A target of above 6% growth was set. That's lower than the International Monetary Fund's forecast of 8.1%.
With COVID recovery and possible global recovery in the fourth quarter of this year, I don't think that it is this low. So what I believe is that the government may have taken into account a scenario that there will be a COVID comeback. And above 6% target could be a weighted average of different scenarios.
When we look at China's goal for the period between 2020 to 2035, we've noticed that in order to achieve its long-term goal, which is to double the income by 2035, it needs a growth rate of 4.7% per year between 2020 and 2035. So we can see a very significant slowdown in its growth.
As the economy gets back on track, Beijing is phasing out stimulus policies and getting its fiscal house back in order. The government is aiming for a smaller budget deficit of 3.2% this year. However, that doesn't mean big spending cuts.
Because this is a number per GDP, and nominal GDP is around 10% this year. So the absolute level of fiscal deficit could be higher. I care more about how to use the fiscal money. I believe that this year, more of the money will be spent on technology R&D.
The work report actually talks about a 2.5 trillion yuan allocation of central government funds that will be transferred to local governments. And this pool of funds will be intended to support people's livelihood in the corporate sector. It will improve the progress on tax reduction, for example, right? And also to support consumption and investment.
What stood out in this year's NPC was the focus on high-quality growth. Setting a softer growth target gives China more room to implement reforms for long-term sustainable growth. Some of these reforms in innovation and research may not yield results immediately. At the same time, fiscal prudence will alleviate any concerns of rising debt and financial risks.
China is not trying to stimulate growth for the year, and is trying to contain other financial risks and try to achieve some of the long-term goals, such as the climate change instead.
There's just going to be a balance because it's a big economy, big country. There's a minimum level of growth that is required to keep the employment up. And the target is to create 11 million jobs in 2021. So I think I take it literally as 6% and up, with potential upside toward that 6.
A key strategy to achieve high-quality growth is to become technologically more self-sufficient. This is one of the main themes in China's 5-year plan. Beijing is looking to expand R&D spending by at least 7% per annum over the next 5 years.
China's self-sufficiency strategy is mainly targeting technology. So China is not trying to be self-reliant in everything. Probably high-tech is the only thing besides food that China wants to gain more self-sufficiency. The reason for that is to mainly face the challenge or threat from the US.
As Beijing undertakes reforms to reshape its economy, one challenge may be balancing growth goals and social policies. With a population of 1.4 billion, any unhappiness over widening income inequality could prove destabilizing.
It's quite a landmark thing in 2020 when the government came out to say they have eliminated the baseline poverty. The absolute growth number might be slower, But I think from a long-term structural perspective, I think the government is paying attention to many other aspects of improving the livelihood and improving the quality of their GDP growth in a structural aspect.
On the international front, China wants to be more integrated with the world, including in trade and services. It's already looking at leveraging on its free trade agreements, like the Regional Comprehensive Economic Partnership Agreement and the China-EU Investment Agreement. All of this is likely to reshape the business and investment landscape in Asia.
In terms of its relations with other Asian economies, it's even tighter. After the sign-up of RCEP, China has basically strengthened its role as the production center in Asia. So I think in the coming decade, there will be a further integration between China, ASEAN, and other developing economies in Asia, and there will be more trade activities instead of less.